This pattern is called the spinning top. They look exactly the same, but their meaning depends on where they form. The name spinning top comes from the toy top you might remember playing with it as a kid, or with Beyblades. Now, when is it bullish? When it forms at the bottom of the chart in a downtrend. That's when it signals the trend may reverse upward. And when it forms at the top, it's bearish, meaning the market could reverse downward. The shadows above and below the body should be at least twice the size of the body. So, if the body is in the middle, the upper shadow should be twice as long, and the lower shadow should also be twice as long. That's when we call it a proper spinning top. Longer the shadows, 2, 3, or even 4 times the body, the stronger the signal. From here, you can see the uptrend. So, if you were able to identify it, when you noticed this forming at the upper side of the chart, you realized there is a spinning top appeared, which usually signals that price could drop from here. All right. Once again, you spotted a spinning top forming. Now what do you need to check? The upper and lower shadows should be at least twice the size compared to the body. Only then it is considered valid. This is what you've learned so far. What is the difference between doji and spinning top? In spinning top, upper and lower shadow wick is twice the body, while dragonfly doji have very small body. When a spinning top appears, it can spin things around. Now let's move to today's last pattern within single candlestick types, known as Marubozu. So, what is a Marubozu? This is a Japanese word, and it represents strength or dominance. When there is strong market momentum, it is called Marubozu. Take a look at these candles. What do you notice? There's no shadow above, no wick, basically nothing. Normally, when a Marubozu forms, it has no wick or shadow at all. If there is one, it's very small. How does this happen? Let me explain. In a full Marubozu, if the price opens here, then closes here, and its lowest point was also the opening price, that means price never went below the open, and it never went above the close. That's called a complete or full Marubozu. Now what is an open Marubozu? Look carefully. You'll notice the shadow is very small. If the shadows are long on either side, whether open or close Marubozu, then it's not a Marubozu. In the case of open Marubozu, the open price remains the lowest. This is what we call an open Marubozu. Now if it's bearish, how will it look? The candle opens at a higher point, but it doesn't make a higher high. Instead, sellers dominate, and the price closes near the low. If a high had been made, then it wouldn't be a Marubozu. Instead, it would be called a Marubozu close.
Let's do a quick revision. So, what did you learn in this course so far? You covered Marubozu, bullish spinning top, bearish spinning top, dragonfly doji, gravestone doji, inverted hammer, shooting star, as well as the hammer and hanging man patterns. Hopefully this video series gave you a solid foundation. Now in the next episode, we'll be moving to candlestick patterns that are formed with more than one candle. Until now, we've only studied single candle patterns, but next we'll dive into multiple candle setups. It's going to be really exciting, so stay tuned for the next part.